Hello, everyone, and welcome to this webinar to celebrate the International Day of Education, which is the 24th of January each year. Before I start introducing our wonderful panel for today, let me acknowledge that I'm coming to you today from the lands of the Wurundjeri people of the Kulin Nation, and I take this opportunity to pay my respects to the elders, past, present, and emerging. Today, we're going to look at one aspect of education which isn't always looked at, which is financial education and the importance of financial education in promoting socioeconomic well-being. So without further ado, I hand over to my wonderful director, Anna, to introduce our panelists for today's discussion. Over to you, Anna.
Thanks, Vinita. With me on our panel discussion today is George Haramis, who is the CEO and co-founder of MoneyGPS, and Simon Brown, who is the CEO of Banqer. And we're talking a lot today about financial education, wellness, and resilience, and going into some perspectives and learnings from the last couple of years, and particularly considering the current environment, things like perhaps the role of technology. But really looking forward to this discussion with George and Simon. And to get a bit more familiar with our panelists today, I'll hand over to each of them to introduce themselves and give us a bit of background about their organization and why financial education and wellness is something that is important to them. George, I might start with you to introduce yourself, if that's okay.
Thanks, Anna. Thank you very much, and it's a pleasure to be here today. Let me give you a bit of background on MoneyGPS. We were formed 6.5 years ago, just before COVID, which was an interesting time to start a business. MoneyGPS is what's called a fintech. We're an Australian-based business. We're a financial technology company, and the reason the business was formed was that not sure who of your audience has been to see a financial planner lately, but if they have, they know that the cost of a traditional financial plan is north of sort of $4,000 Australian, initial cost and ongoing costs as well. So only about 10, maybe 15% of the population can afford those fees. So the other 85% of the population cannot afford those fees, but they know they need advice. And they need advice for a whole host of reasons to get their financial lives in order, plan for pre-retirement, and so on. So the business was formed, and what we've developed is a fully digitized technology platform that allows you to go on, complete a fact find, and at the end of that process, the calculation engine and the algorithms will issue you with a series of individual financial plans which are in your best interest to access and use to help you progress your financial situation. Normal cost of a traditional plan with several recommendations is $4,000 or $5,000. Our plans are $180. So very big difference in price. But importantly, as part of that process, it is a digital process to start with, although we have a hybrid human and about to introduce an AI capability as well for the AI agent to help individuals run through the process. We're supported by a range of sort of key aspects of the platform, one of which is education. So whilst we're a digital player, digital advice provider, we also have a focus on delivering financial wellness. Very important in that respect from where we sit. We work with a lot of employers, associations, institutions, clients from accounting firms, and so on. Their level of financial literacy is not the best in a lot of cases. Rather than standing at a barbecue waiting to get advice on a particular product or service, we provide a range of educational modules. Education is part of every document that we issue. So we aim to increase financial literacy through our process as part of the advice program that we offer to the public. That's a bit about the business.
Fantastic. I'm definitely keen to learn a little bit more about some of the learnings that you found, particularly the role of digital and how perhaps that might have changed as we've seen new technologies emerge. But we'll get to that later on. Simon, I'll hand over to you.
Thanks, Anna, and hi, everyone. My name's Simon. I'm CEO at Banqer. Essentially, we're a classroom software that teaches kids about how money works in the real world. So they don't have to learn about it by trial and error like many of their parents did. And we've been operating for around 10 years now. And I guess we came about under relatively fortuitous circumstances. My co-founder, Kendall, she was at home for a long weekend at the time, talking to her younger brother, who was, I think, in around year 7, year 6 at that stage. And generally conversations with him revolved around football, cricket, or professional wrestling. But that weekend, he was asking questions about earning money, paying tax, hiring people. And while she thought it was cool, she also thought it was a bit strange. So she sort of pressed a bit further to understand where this was coming from. And essentially, his teacher was running a classroom economy and introducing them to all these brilliant financial concepts. And she was struck by the relevance of these things, but also the fact that even though she was a trained accountant and her parents both had a relatively good degree of financial capability, no one had taken the time to teach him about money, and it had really been left to chance. So she reached out to his teacher. A few months later, she took the idea for Banqer, for bringing this online to a startup weekend, and pitched the idea. And the bones and I guess the foundations of Banqer were built over that weekend. And since then, that one conversation is still at the heart of what we do, but it's grown to be conversations with tens of thousands of students across Australasia and thousands of teachers. And our platforms now serve sort of year 3 or 4 through to year 12 across the full spectrum of schools.
Excellent. And it sounds like both of you have things to do with technology, digital, and it's an interesting, I think it'd be a good conversation thinking about that early generation who are learning these fundamentals, and then an older generation or, adult population who are thinking about retirement. And I think particularly young Australians don't love thinking about retirement and superannuation and all of that. So I think it's interesting for us to consider where this starts and then how that flows on as well to hopefully setting up skills in the future. And Simon, while I've got you, I would love to know a little bit more about the opportunity you've seen in the last 10 years with, what's worked really well, what you're seeing translate, some of the key benefits that you've really seen come about from the work that you've done.
Yeah, so I think for us, what's really worked well is this sort of simulative approach we take. So we introduce students to the financial concept, so to what a financial concept actually means, and then we provide them with a simulative environment or a sandpit where they can actually get their hands dirty and interact with that concept in a situation where mistakes are only learning opportunities and they're not real world financial costs. So students have mock online bank accounts, they earn a fictitious wage, they pay classroom expenses, they enroll in fictitious super, they take out insurance and make investment decisions, all the sort of stuff that many adults will be or maybe should be doing. So for me, I think that's been one of the key learnings for us, is the importance of that simulative piece. Not only can we build financial literacy, so students' understanding of a concept, but also financial capability, allowing them the opportunity to actually put that into practice, with that financial literacy and financial capability sort of being the broader foundational blocks of financial wellbeing. And I think we've also seen that students just enjoy being able to get practical and being able to be treated like adults and being able to engage with these sort of adult money concepts as well.
It sounds like it's something that feels more tangible, especially because I mean, of course, some people's parents own businesses or, they are talking about money or, trying to teach these practical skills. So then I love the idea of learning without making mistakes, because I think when you're an adult, you typically will learn the hard way, especially with credit. You just learn that how much debt you'd like to have, or credit card debt, or the process of saving for a home or whatever it might be, but kind of this practice round before it's actual money that they're earning. That sounds really positive. And are you finding that there are any topics that kids are particularly excited about or engaged with or find particularly challenging?
Tax is always a hard sell. It's always quite challenging to get students excited about that. Apart from that, they love earning money. The idea of earning and being able to spend money, I think, is something that excites them. It's something that I think they see happening in their day-to-day lives anyway. So those are the big ones. Yeah, I mean, I think they get excited about the simulative nature and being able to actually practice with it, I think. And it's those sorts of it's seeing that in person are sort of the more memorable moments for me over the years. And you sort of talk about the mistakes they make, and it's the likes of a teacher in a classroom that we visited where she'd introduced students to online safety and phishing scams. She then went home and emailed fictitiously all of her students from her own email address, claiming that she was from Banqer and she required their Banqer passwords. Those students who responded with their Banqer password turned up the next morning to find that their Banqer fictitious money account had been cleaned out. And so they learned the hard way. And you talk about remembering those mistakes. I think that's the sort of environment that we're looking to create.
I love that. That is awesome. I think especially when you think about a new generation of young kids who are growing up with technology at the core, they didn't have any childhood without technology. And I think when we speak about scams and when I've read about these, you kind of hear older and youngest people are more vulnerable to scams because they're either less cautious or they just don't have the understanding of how this could happen. So that's such a insightful and hard way for the kids to learn that, but it's great because they're not going to forget that.
Yeah.
Yeah, that's great. Now, George, I'll jump back to you. I'd love to know in terms of, what you've been learning in the last couple of years in what's working well, what you've seen, some of the successes with MoneyGPS.
Sure. So you've got to remember that 6 or 7 years ago, there were no digital advice providers in Australia. Sorry, I think there was one. So because technology is moving very, very quickly, now there are 5. So we're each operating in separate sort of sections of the community, but where we fit in is that we engage those end users from institutions such as banks and accounting firms and so on. The challenge with the people that use our platform is firstly trusting the tech, because you're not engaging with a human financial planner who will sit down with you face to face, maybe across the desk in an office, run through your financial situation, take you through the mechanics of that, come back with a recommendation, and away you go. We don't do that. Everything is online, and it can be a fully online experience, but people being people want to speak to another human. And the older the client is, the more likely they are at the moment to speak to or want to speak to a human. The younger the individual, they don't want to speak to anybody. They just want to run through the tech. So we have a hybrid offer. Our tech is fully digitized, from A to Z, but we have the hybrid or humans involved, ex-financial planners, salary people that don't give personal advice because all the personal advice is issued through the license. So engaging with a human builds the trust factor. You can progress a lot further during the process. We are about to introduce AI agents, qualified AI agents who will actually be able to communicate with our clients online, over the phone first, and then through an avatar online. That's the sort of next stage. So from a tech perspective, I keep saying it's moving very quickly, exceptionally quickly in that respect. So what we've learned is that tech is great. You need the human involvement at some stage because, as I said, people are people. They want to speak to a human. And from an education perspective, we have 43 education modules on the platform for free. We don't charge people an access fee for those. They focus on concept, on the concept, superannuation, savings, investment, insurance, what's a will, and so on. So we don't just focus on advice, but we focus on every aspect of financial services that allows people, if they progress with the right things, to put themselves in a very, very good position now and for the future. And that's the challenge, because some people come to us too late. Others come to us and are really keen to progress and, as I said before, get their financial lives in order. But everybody wants to learn more, hence the education modules are very important. Hence the GPS coaches, as we call them, are qualified people that can, transfer their knowledge to the individual. And also that'll be the same case with AI technology. But I guess from a learning perspective, we would have liked the education to start a lot sooner for people before they get to us, right? So from Simon, in terms of Simon's business, it's a fantastic idea, great concept, and we'd like to see that happen more in Australia. There are a couple of organisations who we know that are building technology platforms which are focused on financial education. purely education for kids, basically 14, 15 years upwards. From our perspective, we'd love to have something like that on the platform, because I'm sure that, for parents using it, they want to offer this to their kids. I mean, the cost of living pressures are just getting more and more harder and harder to actually buy a home and all those types of things. The other side of that is that some of the groups who work with, particularly employers, are really keen to deliver our platform to their employees because of a couple of key reasons. Financial stress is a huge factor in the workplace, massive factor. It's the cause of $39 billion of lost productivity in this country. So it's a lot of productivity lost. So the more you can help people, the more you can improve their financial literacy, the more you can give them a pathway, a roadmap to improve their financial situation, actually quantify that for them. The less stressed, more focused on work, employer retains the client, the employee, increases productivity, everybody's happy. The next stage of our development, if you like, is that we're about to introduce a financial wellness score. So that will rank people's financial literacy level. Now, we're doing that with a company called Your Financial Wellness. They are I know you know them. We're working very, very, very closely with the team there. Their financial wellness score, which is a globally recognized solution these days, they won an award at the Singapore FinTech Festival in 2024, will be incorporated in our platform. We used to have a financial wellness score until some bright spark said, "I'll take it out, do something else." So we're now reintroducing it with the guys at Your Financial Wellness and working with their clients as well. So education gets you to some point, but after a while, you need more than education. You need a solution, and that is advice. And education is very important, as I said. But everybody that comes to us is looking for the end game. What do I do about my super? How do I retire better? How do I build my wealth? How can I buy a home and so on? So we've learned to sort of focus on the key aspects of what people can be offered in terms of solutions. And the way to do that is to educate and provide the solution through a technology platform. That's the only way we could scale. So, we don't have people on the ground. Yeah.
Have you seen any differences in what people are coming to you with in terms of their financial goals? Are you seeing more about buying a home, thinking about retirement, or is it kind of tends to be the same based on the life stage where they're coming to you at? Like, I'm interested, just given the current climate, if there's more desire to buy a home or perhaps less, or if people are thinking about retirement more or less.
It's a good question. So let me answer it this way. We spoke to an online ETF provider, so online investments. They have 500,000 users in Australia, which sort of blew us away because, a month ago we didn't know they existed. Now we know they've got 500,000 users. Most of those users are young people. And the reason why they're investing is to build up their wealth a lot quicker, outside super, and for most of them to buy a home. That's what they're doing, to buy a home. So, that's why we develop particular advice documents to help them buy a home, like the First Home Super Saver Scheme, which people don't know about in the main. So what we're seeing, I guess, is particular demographic groups focus on key issues. I want to buy a home. 25 to 35, late 20s to early 30s, really keen to buy a home. That is the main focus of those people. Super, if you're 25 and you're working steadily, your super, if you're doing it properly, just by the superannuation guarantee levy, will put you in a very, very good position by the time you retire to actually generate an income stream. The challenge with all that is, super's too far away. I don't understand it anyway. I don't think it's a good investment sometime. Well, no, the structure is good. From a tax perspective, it's terrific. The investment's a separate matter, and that's part of the education process. So young ones focus on homes, super maybe later, non-super investments. The older the candidate that's going through our process, the more it's sort of mid-40s to early 50s, consolidating wealth, growing their wealth, and then late 50s, early 60s, obviously pre-retirement. They're the three key demographic groups.
Yep. Yeah, that makes sense. And I think it's reassuring that there are still goals for home ownership, because I know some of the work your financial wellness have done shows that when you've got an asset, debt tied to an asset such as a home, your financial wellness score is better compared to
Much better.
when it's, personal debt for a car.
Much, much better. And, from our perspective, it's great that they will, aspire to own a home and take out a loan and so on. But you don't want to be burdened with a loan for 25 years. So, from an education point of view, one of the services that we provide is, well, how about we convert some of this non-deductible debt, get rid of it really quickly to deductible debt? From a tax perspective, Simon, I'm sure your students would love that, because now I can claim the debt, or the interest on the debt from a tax perspective is much better. So we always look at programs and I guess informing, educating the end user. How do I put myself in a much better position going forward with what I've got today? And we've got a provider that shows them a plan over, I think, 5 to 10 years to get rid of their 25-year loan and move into surplus, so they can actually build their wealth, which is a really neat thing to do.
Absolutely. And if you're helping people sort of early enough in the journey, as you mentioned, that means that it's not just, oh, I bought a home, but I can imagine it's helping them buy a home that is appropriately set up in terms of the debt, and also identifying how they can pay that off early to maximize their savings.
Absolutely. So the earlier the education is there, as per Simon's business, the better the individual is, and the better the country is. Actually, the better social security system is.
Absolutely. So many positive benefits, as you mentioned, with
Very
productivity,
much so. Yep.
employers, everything.
Yep.
And Simon, are you seeing that are kids aspiring to buy homes? Is that something that they're thinking about?
I think so. Home ownership is definitely something that we cover in the platform. So students have the ability to take out a mortgage and purchase houses. I'm not really close with the specific engagement data we have around that, but it's definitely something that we offer and that we see students engaging with. Yeah.
Yeah, nice. And from the perspective of, opportunities for improvement, what do you think is needed when we think about financial education for kids? Is there anything that you think are particular challenges that need to be addressed, or anything that you're seeing is making it more challenging to educate in this space?
Yeah, I think for me, it's probably around consistency of access. So while financial literacy education shows up and is referenced in different national and state curricula, it's often an elective subject. So we have a cohort of young Australians who essentially their preparedness of their financial future has been left to chance. And I think making financial education compulsory in some sense, so every student that leaves school has a certain degree of financial capability will go a long way to solving that. My accent may have outed myself, but I'm a Kiwi, and we've just had a curriculum refresh process over here where we've essentially made financial education compulsory. And as I say, I think that can go a long way to improving financial well-being of future generations.
Absolutely. Otherwise, it's something that some kids have access to by chance, or by the nature of which school they're at or where it's available.
What their parents know, or what whoever's at home knows, and maybe thinks they know or doesn't know. Don't know.
Yeah. So then, if we were to think about who has the greatest role to play when we think about financial education, there could be parents educating their kids. It could be the individual seeking financial advice, or government making this compulsory, or employers. Who do you think has the greatest role to play?
Yeah, I definitely think it's a shared responsibility, but if we think about where the most impact can be made, I do think it's at schools, because at the end of the day, that's where we have the greatest opportunity to break intergenerational financial illiteracy. So I think schools have a big role to play, but to my earlier point, I think government can support that by making financial education compulsory as well, and resourcing it appropriately. Schools are busy places. There's a lot of pressure on teachers, so we need to make sure that financial education is also easy for them to deliver.
Absolutely. And that's a good point with, teachers already have to put in so much to just keep things progressing, even with all the supplies, and, often having to put in the extra time and extra money to make sure they can do what they need to do. So giving them better support to ensure they can provide this education makes a lot of sense. And George, who do you think has the greatest role to play when we think about financial education, resilience, wellness?
Yeah. Well, I'd sort of reiterate Simon's points about the school education being a good place to start, but a lot of people are working, so their employer is the next stage for us. I mean, a lot of employers now, we have a background in working with employers, so benefit programs have been around for a long time now. It's financial wellness, but there's more of a focus on improving literacy rather than just providing with products and services because of the reasons I spoke about earlier. So schools definitely, employers and associations, and government as well. I mean, I agree. I mean, it should be compulsory in education. And if you want to progress with that core subject, you could do it at high school as well as university. And university, it's financial planning as a subject. Whether you want to become a financial planner or not, that's a sort of separate issue. But the more you understand the basic financial concepts, the sooner in life, the much better off you'll be later in life, believe me. So, people coming up to retirement, the government in Australia is pushing for the super funds to educate them and provide certain products. Well, it might be too late for those people because they've already made a call on something that wasn't the right call. So the sooner we can get in there, much better, and reinforce it at every stage of their sort of, I guess, the stages of their lives going forward.
Do you think technology will make it easier to do this? Or no, maybe not easy, but do you think the opportunity for improved access to this kind of training and education is getting better given the platforms we have available?
Oh, absolutely. Technology allows you to scale and to reach more people. What's true and what's not true depends upon the technology platform you jump on. But for well-established, genuine platforms, absolutely it is. I mean, for us, for example, you can go through 43 education modules, learn lots of things. There's a test at the end of each one, so you can repeat that process for nothing. And you can get access to a lot of information for nothing, but it needs to be sourced and validated as a starting point. I think that's where the important aspect of it is, where it is valid information, not product pushing. We're not into that. We don't want to see that happen. So yes, technology plays a part. And not only technology in the sense that you can go through an online course, but you can have a discussion with an AI agent about a particular matter. Tell me a little bit more about this or more about that. Questions that you wouldn't probably maybe too embarrassed to ask in an open environment, but comfortable in asking a humanoid the question because they'll respond quite frankly and then lead you to other sources where you can access more information. Yeah.
And I think having that within an environment where it's controlled would be really beneficial as well. So it's not just speaking to a chatbot generally.
No. It needs to be controlled and validated and secure and compliant. And compliance is a very big aspect of our business and our game because we have an Australian Financial Service license. We issue the advice under that license. I'm one of 2 responsible managers. I don't want to go to jail, so the advice is compliant and all of that type of thing. But compliance is really important. Yeah, compliance is really important.
Absolutely. And Simon, you mentioned an example earlier with, I think, technology being quite an interesting way to help kids engage with these concepts, which makes sense given, kids will have pocket money potentially given to them in digital accounts, or the more they start to engage with money in the real world, it's probably digital more than a piggy bank. Is that something that you think has helped to kind of expand the opportunity for financial education, having things like these digital tools that can teach kids about how money is going up and down and things like that?
Yeah, I think so. I think to George's point around scalability, it's meant that quality financial education can more easily scale. We support the teachers to deliver financial education, and that's not reliant on us having boots on the ground throughout Australasia. So I think that means that, we can better deliver financial education. I just think it's also generally heightened the need for financial education. Financial products are more complex and more accessible than ever for younger generations. So I think that just heightens the importance of good financial education at an appropriate stage of life as well.
Yeah, it's a really good point that it's less about kind of, oh, at this certain point there may be a product that's suggested to me. There's advertising, there's things being pushed, or even just people talking about things online and being exposed to products, investing different types of good things and bad things potentially as well. So that sounds really good. And looking for the future, I would love to know, Simon, what you're excited about, what you're looking forward to in terms of the next couple of years or the year ahead. What's front of mind for you?
Yeah, our focus is really continuing to grow in Australasian schools. To date, we've reached over 700,000 students and we reach 45,000 each year in Australia. So just looking to reach more students and more schools. From a product perspective, we're in the process of redeveloping our primary school platform. So sort of introducing a reimagined version of that, which is better aligned to the curriculum and more than ever going to help teachers deliver financial education easily. So really excited about seeing the development of that platform happen this year and sort of getting that out in the hands of educators and students throughout Australasia.
Great. Sounds really good. And yeah, hopefully gets it closer to, just more and more kids having access to this and really setting the foundation at an early age.
Yeah.
George, what are you looking forward to for the year ahead or the next couple of years?
Look, a couple of things. We're in the advice business as a starting point, so we'll be introducing more digital advice topics for consumers and self-managed super funds, to be honest, because the SMSF sector makes up 25% of our $4 trillion superannuation sector. So it's a big part of our market. So increasing the number of advice topics, more so focusing on retirement planning because of the number of people who are about to retire, already retiring, and to help them generate a good enough income from their assets. The second thing is moving more into the digital AI space, clearly bringing on more AI agents to cover off all of the things that a human can do currently with us. So that's an exciting part of what we're doing. Our technology is transferable to other jurisdictions. So we've already had a chat to the FCA in the UK, and they've given us a green light to operate there. So that's another market for us. But I guess getting down to the nuts and bolts, it's delivering affordable advice underpinned by improving people's financial literacy. That's the aim here. If we can do that, then everybody will be in a much, much better position going forward.
Absolutely. It's kind of the financial literacy gives you the foundation to be capable and then be resilient, which improves your financial wellness. And it sounds like, yeah.
It provides you with the understanding of what you need to do to improve your situation, knowing that there's a fallback with assistance from people like MoneyGPS, Simon's Business, and so on. And I think, we'd love to having a chat, being involved today and having a chat to Simon as part of the process. It'd be great to introduce something for the kids of clients that we work with, because I'm sure every one of our mature clients would want to say, my grandkids are my kids. We want them to be in a position where they can retire well, or they can buy a home. And that starts obviously at a very early age to get that sort of understanding going.
Absolutely. And Vinita and I love doing these conversations when it helps connect people together. I think especially today's conversation has been a really good example of how, we can think about the youngest generation for financial capability and wellness and how that can be built, and then how that also supports better outcomes in the future. But also, George, with your work, if for those who weren't given this education when they were younger, just trying to get them engaged as early as possible to give them the best chance.
Yep.
Fantastic. Well, thank you both for your time. I'll hand over to Vinita to share some concluding thoughts, but this has been really great.
Thank you.
Thanks so much, Anna. And thank you, Simon and George. That was such a fantastic conversation. And I'm so glad we brought the two of you together. It's almost like a continuum for Anna and myself to see, the education starting early, which you've also acknowledged, George, is so important for the adults when they reach the point where they need to make financial decisions, as well as, Simon, for you to point the students who are older maybe and maybe starting to look at employment towards what George is doing and the advice that they need even early in their career. I love the fact that both of you have also identified that there's a difference between knowledge, between practicing that knowledge, which is skills, and then the attitude, which is the behavior. So as someone who's studied these concepts for decades now, it's wonderful to see all of that theory is coming into practice. You're giving people the opportunity not just to learn, but also practice those skills and then actually behave differently looking at their solutions. So I absolutely love that fact. I also love the fact that you have identified the need for a system-wide approach and partnerships at all levels in order to be able to help people to make the best financial decisions. And last but not least, the fact that financial stress is bad for the individual, leads to mental health issues and challenges, as well as for the economy. The billions of dollars that are lost in productivity. As an ex-banker who's now studying psychology, I see both ends of that spectrum. And I absolutely love the fact that hopefully this little webinar has given you the opportunity to think of partnerships that you, between the two of your organizations, can foster, which is exactly what Anna and myself are absolutely passionate about. So once again, I thank you for your time. I'm sure our audience will absolutely love the insights that both of you have brought. Thank you so much, and all the best to Banqer and to MoneyGPS for the future.
Thank you, Vinita.
Thank you very much.
Thanks, Anna.